Hey there, I'm Apple Creator with Investing Simple. In today's comparison, we're looking at the two popular investing apps, M1 Finance versus Acorns. Now, these are two apps that appeal to the younger generation of investors because they offer no fees and no commissions in order to buy and sell stocks on their platforms. In this video, I'll be breaking down the core features of each platform, what sets them apart, and then which one is going to make the most sense for you. So let's dive right on into it and start with M1 Finance. So in general, M1 Finance is best for long-term investors that want to create steady portfolios over time and really automate them as much as possible. So the platform has this unique functionality where it's based on the idea of pies, and essentially a pie, an investment pie, is created by picking the different stocks and ETFs that you want to invest in and then dedicating a certain percentage of your pie or portfolio to each individual stock. So say you wanted to invest in 5 stocks, 20% each. That's great. You've just created an M1 Finance pie of these 5 different stocks. And then from there, what you're able to do is fully automate this by putting in a flat, say you want to put in $100 a month to your pie. It's going to just automatically go in. It's going to automatically rebalance you and keep you at your target allocation over time. So that's the core of the platform. There's a ton of other features though that we're going to dive into in just a minute, but as you can see, it's a very highly automated platform and it kind of ties in different features of a traditional online brokerage account with the idea of a robo-advisor. And a robo-advisor essentially is this cross between an online broker and working with a financial advisor. So this kind of middle ground over here. So M1 Finance is kind of like this hybrid of like a robo-advisor, but also an online brokerage account that you can use to invest in the stocks and ETFs that make sense for you. Also, unlike your traditional robo-advisor accounts, M1 Finance is completely free to use. So there are no fees associated with the platform at all. There is an optional kind of upgrade or subscription that you can choose to sign up for, which we're going to talk about a little bit later. But the core functionality of the platform is totally free and you don't need to upgrade to get the functionality out of it. Now, both M1 Finance and Acorns are going to offer you retirement accounts. So these can be used to capitalize on some tax advantages that the government allows you to utilize if you are investing for the long term and investing for retirement. So on Acorns, you do have to upgrade to the personal plan, which we'll talk about a little bit later. But on M1 Finance, you can get access to retirement accounts 100% for free, which is a big plus that the platform does offer. Now, with M1 Finance, you can directly purchase stocks or ETFs. So you're not buying the shares individually, but you are adding them to your pie. And then as you invest in that pie, you are buying shares of these stocks and ETFs. Basically what this means is you can build your own portfolio. This is particularly attractive to the more DIY investors. But if you are someone who doesn't want to build your own portfolio, they also offer a collection of dozens of expert-built portfolios or pies that you can choose to invest in. These are things like target date funds. So these are pretty cool because what they do is you say, okay, I'm going to retire in, say, the year 2050. And so you buy this target date fund for 2050. What it's going to do is as you approach 2050, it's going to get more conservative over time. So maybe now it's mostly invested in stocks, but as the years go on, it's going to gradually reduce the number of stocks, gradually increase the number of bonds and cash. So when you get to retirement, it's like not as volatile, it's not fluctuating as much. So you can invest in things like this, things like socially responsible funds. So investing in companies that are good for the planet, good for society, things of that nature. And so those are all also available absolutely free of charge on the M1 Finance platform. You're also able to buy fractional shares on M1 Finance, which is a big plus because if you had to wait until you had $3,000 in your account to buy a share of Amazon, that would be really inconvenient. So you can buy as little as 1/10,000th of a share. So in the case of Amazon, you're looking at like 30 cents to buy into Amazon, which is absolutely ridiculous when compared to the actual share price of the company. So this is a big plus for smaller investors that want to get diversified but don't have tens of thousands of dollars to create a well-diversified portfolio. They can do so with only $100 on M1 Finance. And speaking of $100, that is the minimum to get started on the platform. So you need to have at least $100 in order to open an M1 Finance account, $500 if you want to open a retirement account. So in the grand scheme of things, this is pretty low as far as minimums do go. Now, M1 Finance also does offer a dividend reinvestment plan, which essentially allows you to take your dividends that you receive from stocks, so these are cash payments that stocks are going to pay you, and reinvest them across your entire portfolio. We have a whole video going over how dividends work on M1 Finance because there's a bit of a more involved process, so you can definitely check that out up here if you want to learn more about that, but just know that there is a dividend reinvestment plan on the platform. Now, I mentioned earlier that M1 Finance is specifically tailored towards longer-term investors, and one of the core features that supports this is their one trading window per day. So you're not able to actively buy and sell stocks throughout the day as you could on kind of an active trading platform like Webull or Robinhood. Instead, you have one trading window per day where all of your transactions happen, and then you wait until the next day for your trading window to happen again. And so this really discourages people from trying to do like short-term trading strategies or day trading or anything on M1 Finance because you just have that one trading window. A few other features that kind of support this long-term philosophy are first your automatic rebalancing. So if you're not familiar with what rebalancing is, essentially say you create this pie, you've got 5 stocks, 20% each. Well, flash forward a year, you're probably not still split up 5 stocks, 20% each, because some have gone up in value a lot, some may have gone down in value, and so your percentages are off. So what M1 Finance does is that anytime you add money to your portfolio, it's going to add it to the stocks that you're lowest in, and then when you sell, it's going to sell from the stocks that you're highest in. So it essentially forces you to buy low and sell high, follow that kind of time-tested investing advice, and that's super convenient. And then kind of coupled with that is the idea of tax minimization. So while they're doing that and kind of forcing you to buy low, sell high, they're also taking your tax consequences into account. So they're figuring out, okay, if we sell this, it's going to be long-term. If we sell this, it's going to be short-term. And they're kind of optimizing that for you as well. So you don't have to be thinking, okay, which things should I sell? Which things should I buy in order for my taxes to be optimized? M1 Finance is actually doing that for you. So that's kind of the investing side of M1 Finance. There's also a couple other kind of non-investing related things that you can choose to participate in if you want to. The first of which is called M1 Borrow. And with M1 Borrow, essentially what you're doing is you're applying for a portfolio line of credit. And so M1 Finance is potentially going to extend you a line of credit equating to 35% of your portfolio if you would like to. And essentially how this works is you're taking a loan from M1 Finance that is secured by your portfolio. So they're lending you, say your portfolio is worth $100,000. They might lend you $35,000, and you can pretty much do whatever you want with that money. You could choose it to invest in your portfolio and kind of leverage up your returns. You could choose to go out and buy a car or put a down payment on a house or whatever you want to do with that $35,000. And it's secured by your portfolio. So M1 Finance knows that if you stop paying on your loan, they can just take your stocks from your portfolio and kind of recoup the money that they lent to you. Now, there's a lot more that goes into M1 Borrow than just that, but that is kind of the general concept of that. Now, there's also M1 Spend, and with M1 Spend, it's kind of like a checking account and debit card that you can use in tandem with your M1 Finance account. And this is great for people that kind of want to put all of their personal finances in one place, so you can just have your checking account be your M1 Spend account, your investment account be your M1 Invest account, and then kind of move money freely between the two accounts. So this is totally free, again, on the M1 Finance free plan, but if you do upgrade, then you can start to earn interest on the money you keep in M1 Spend. Let's talk about that right now. So the paid subscription on M1 Finance is called M1 Plus, and it is a flat $125 per year. Now, there are like 4 key benefits that you're gonna get with M1 Plus, so let's talk about those now so you can kind of determine, is this something that makes sense for you, or are you just gonna pass on M1 Plus? So the first benefit you get with M1 Plus is you get a second trading window every single day. So instead of just having one trading window in the morning, like we mentioned, you're getting a second one in the afternoon, which gives you a little bit more flexibility with your investing. The second of which is that you're getting lower interest rates on the margin on your M1 Borrow account. So with your typical M1 Borrow account, the interest rates start off at 3.5%. If you have an M1 Plus account, that drops down to 2%, which borrowing money at 2% is pretty attractive. So if you do want to, again, like I said, go out and buy a car or a down payment on a house or whatever, having that M1 Spend at 2% could be a very attractive offer for you and potentially save you significantly more than that $125. The next benefit you're getting, like I mentioned earlier, is with that M1 Spend account, you are getting 1% cash back on all the money you spend on that debit card, and you're getting a flat 1% APY on all the money that you keep in your checking account, which can be pretty attractive as well. And then the last feature, this one is relatively new, are smart transfers. So M1 Smart Transfers essentially allow you to set up these automation rules between your M1 Spend account and your M1 Invest account. So what you could do, for example, is you could say, okay, anytime my checking account reaches over $1,000, I want to invest that money into my investments. So what M1 Finance would do is they would just monitor your M1 Spend account. Whenever that balance got over $1,000, boom, they're just moving the excess to your investments. And so you can ensure that you don't have to keep looking at your checking and say, oh, I guess I got $1,200 in there, now I should move 200 over. M1 Finance is just taking care of all of that, so you don't have to worry about things of that nature. So that's M1 Finance in a nutshell. Okay, now let's talk about Acorns and kind of compare and contrast the two. So in general, Acorns is going to be best for investors that don't want to think about investing at all, because they were built around this spare change roundup feature, which essentially, when you go out to the store, say you buy a $2.50 cup of coffee, Acorns is going to take that extra 50 cents, they're going to round you up to $3, take that 50 cents and invest it on your behalf. And so they are essentially the most passive investing you can do, because you don't have to think about this at all. You just sync them up with your debit or credit card, and then anytime that you spend money, they're just rounding it up and investing it for you. Now, depending on how much money you spend, maybe this will add up to a significant amount, maybe it won't, but it's best for the forgetful investor that just doesn't want to devote any brain space to investing at all. Now on Acorns, you're not able to choose the individual stocks and investments you want to invest in. You are instead limited to 5 different portfolios that you can choose from, ranging from at the conservative end, there's a very conservative portfolio, and then on the aggressive end, there's a very aggressive portfolio, and then you've got kind of 3 portfolios in the middle that go from conservative to sort of conservative to moderate to kind of aggressive to aggressive. So you've got these 5 different portfolios you can choose from depending on your investment time horizon and your goals. Now, these portfolios aren't just like thrown together. I mean, they were created in part by Harry Markowitz, who is a Nobel Prize winning economist. If you took econ classes at all in college, I'm sure you heard plenty about Harry Markowitz, but these portfolios were created in tandem with him. So there's definitely some solid time, effort, and research that went into creating these portfolios for you to choose from. Now, in addition, on Acorns, you're also getting access to retirement accounts and custodial accounts. So with a custodial account, this is an account that you can invest for your child's behalf. So they're called UTMA or UGMA accounts, Uniform Transfer to Minors Act, Uniform Gift to Minors Act accounts that you can use to invest on your child's behalf. Essentially how these work is you put money in the account, you can invest it, and then when your kid turns either 18 or 21, depending on your state, they get full access to that account, no restrictions whatsoever. So it's super important with these kinds of accounts that you have a conversation with your child about how the money is expected to be used before that time comes around, and you're legally required to turn over the keys to the account to them, because if you don't have that conversation and they just wind up with this money, it might not be going towards the things that you wanted it to go towards. In addition to their investing options, Acorns also has a couple other non-investing related services that they do offer their users. The first of which is called Found Money. And essentially how this works is if you sync them up with a debit or credit card that you use, when you shop at 350 or more of their partner merchants, you are going to be getting cash back or stock back on your shopping that you do. This can range all the way up to 10% rewards on the shopping at popular stores like Walmart, Walgreens, and Airbnb that you're getting just for spending money at this place. So within the app, you're actually gonna be able to see what the current merchants are and what the rewards rates are for those different places. And then whenever you swipe your card there, Acorns is going to see that, and they're going to invest more money on your behalf straight into your account. In addition to this, there's also the Acorns Spend account, which is super similar to the M1 Finance checking account. However, there is no interest offered on the Acorns account. You're also getting a debit card that you can use at over 55,000 fee-free ATMs across the United States. You're getting FDIC insurance up to $250,000, the same as you are with the M1 Finance checking account. And essentially, this is a way for you to streamline your finances. If you're using Acorns for your investing and you also have an Acorns Spend account, you can really streamline, put everything in one place, and again, just make your finances as simple as possible, which is kind of the core offering that Acorns is giving you. Now, unfortunately, unlike M1 Finance, Acorns is not free. There are 3 plans that you can choose from that range anywhere from $1 per month all the way up to $5 per month, depending on which of these services that I mentioned that you want to take advantage of. So with your $1 per month subscription, essentially what you're getting is you are getting your investing account and you're getting Found Money. Those are the only things that you're getting. There's no retirement and there's no custodial accounts. If you upgrade to the $3 per month plan, then you're getting retirement accounts and the checking account or the Acorns Spend debit card as well. And then if you upgrade to the $5 per month plan, that's when you're getting custodial accounts so you can invest on your child's behalf. So in general, these fees sound pretty low, but they could really start eating into your investments if you don't have a very high account balance. So you'll have to keep that in mind and really weigh out the pros and cons to these fees when you're deciding whether or not to use Acorns. Now, on top of that, there is also a $5 sign-up bonus with Acorns that you can use when you use the link down below in the description to sign up for an account. Now, overall, if you're a completely forgetful investor that just doesn't want to think about investing at all and has no interest in thinking about finances whatsoever, then Acorns is probably the move for you. But if you're somebody who has at least a little bit of interest in finances, you want to learn about this stuff, you want to actually take charge a little bit, then you're probably going to be better served by M1 Finance because it's free, it has more customizability, and there's just more kind of functionality you can get out of the M1 Finance platform than you can out of Acorns. However, the barrier to entry on both platforms is very low, so you can always choose to sign up for both, try them both out, and then see which one you enjoy better to make that decision on your own. But if you do want more information on Acorns versus M1 Finance, we have a full comprehensive article over on our website, investingsimple.com, where you can learn even more. Now, the best way to find that is to head on over to Google, type in Acorns versus M1 Finance, and then click on the link for investingsimple.com. We'll see you over there.